Listen up, Palantards. It looks like today, we've seen the market is still correcting. Palantir's price is still in the process of recovery. However, massive bombshells has been dropped today. Donald Trump just reopened the opportunity for Palantir. Alex Karp's insane plan has been revealed. And these could set Palantir's price on its foot again. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir's stock is still going through a rough patch, and the correction isn't slowing down. In fact, today it slid even further, hitting around 84 bucks. After a major rally not too long ago, the stock has now tumbled more than 40%, leaving investors wondering what's next. One analyst described the situation as a full-blown roller coaster. According to him, the big concern on everyone's mind? Potential defense budget cuts. Since government contracts make up a big chunk of Palantir's revenue, any sign of reduced spending could put pressure on the stock. That fear has been enough to keep investors on edge, overshadowing some of the company's recent wins. But not everyone sees trouble ahead. Some major political figures are still betting on Palantir's long-term success, suggesting there's strong confidence in its future. In fact, Wedbush analysts believe the defense budget concerns might actually work in Palantir's favor. They argue that in a tighter spending environment, the Pentagon could become more selective with its contracts, and Palantir's track record might help it secure even more deals. And let's not forget its recent earnings. Palantir's Q4 results were a knockout. The stock surged more than a fifth after earnings, revenue climbed well over a third, and its U.S. commercial business, especially in AI, continued to gain momentum. The company's growth is undeniable, and it's making serious moves in the AI space, which could be a game-changer for its future. Still, the big question remains, is Palantir worth its high price tag? Investors love its potential, but with such a premium valuation, it has to keep proving itself. Can it maintain this kind of growth and justify its price, or is there still room for a deeper pullback? The mood around Palantir is still pretty rough. People are stuck wondering, should they cut their losses and sell, or should they hold on and hope for a rebound? The uncertainty is real, and you can feel the hesitation in the air. But wait, something interesting is happening. While regular investors are feeling shaky, some even offloading their shares, the big players are seeing an opportunity. Institutional investors are quietly loading up on Palantir, taking advantage of the fear in the market. One analyst just revealed a major move on social media. A massive fund, managing well over $100 billion, just jumped in and opened a brand new position in Palantir, grabbing nearly 3 million shares. That's not the kind of move you make if you don't see potential. So while retail investors are panicking, Wall Street's heavyweights are making their play. Are they onto something? And here's where things get really interesting. Palantir's current position might be a huge turning point. One analyst pointed out that this moment could set the tone for what happens next. Right now, the stock is testing a key level. What used to be a major resistance point has now turned into support. If it holds, this could be the foundation for a comeback. But if Palantir slips just a little further, it could break through that support and lose an important technical level, which might send it even lower. It's a critical moment. The stock is hanging in the balance, and the next move could decide where things go from here. Will it bounce back, or is there still more room to fall? But hold on. Some breaking news just dropped, and this could send Palantir's stock soaring. Donald Trump just signed a game-changing executive order, and it's a huge win for Palantir. The order pushes all federal agencies to start using advanced tech to review and cut wasteful spending. It also requires them to track every dollar spent by employees with clear oversight and report everything to a newly created government efficiency department. This isn't just good news for Palantir, it's huge. And here's why. First off, Palantir is already a leader in government data tracking and efficiency. That's literally what they do best. Now, with this new executive order forcing agencies to get serious about cutting waste and tracking every dollar, Palantir is in a prime position to step in and provide the solution. This could mean even more government contracts and a massive boost to their revenue. But there's another layer to this. Alex Karp and Elon Musk. Their relationship has been making headlines lately, and it's only getting stronger. With Musk's influence in government tech initiatives and Karp's expertise in data-driven decision-making, this could be the start of something even bigger. Imagine a future where Palantir plays a key role not just in government efficiency, but in a broader push for AI-driven solutions across major industries. And if Wall Street sees Palantir locking in even more government deals, investors will take notice. More contracts mean more revenue, and that kind of momentum could easily send the stock price climbing. Could this be the catalyst that pushes Palantir to a whole new level? It's starting to look that way. But wait, this is just the beginning. Because today, Alex Karp made another huge move for Palantir, and it's got everyone talking. A post just dropped revealing that the UK Prime Minister was spotted touring Palantir's DC office with Karp himself. Yeah, you heard that right. One of the most powerful leaders in Europe, personally meeting with Palantir's CEO at their headquarters. And this isn't just a casual visit. This could be the start of something massive. Palantir has been making serious moves in Europe, and if this meeting is any indication, they might be on the verge of securing even bigger deals overseas. Palantir expanding deeper into Europe isn't just another deal. It could be a game changer for the company's long-term growth. Right now, most of Palantir's revenue comes from the US, especially through government contracts. That's great, but it also makes the company vulnerable to things like defense budget cuts and political shifts. Expanding into Europe means tapping into a whole new market, bringing in fresh revenue streams and reducing its dependence on the US government. More countries using Palantir's technology means more stability for the business, which is exactly what investors want to see. And let's not forget, Europe is going through its own digital transformation. Governments and corporations there are looking for powerful AI-driven solutions to handle security, defense, and data management. Palantir is built for that. If this momentum continues, we could see more partnerships forming across the region, securing long-term deals that fuel steady revenue growth. Now, about that price drop. This kind of expansion could be exactly what Palantir needs to recover. Investors have been spooked by the recent correction, but global expansion adds a new layer of confidence. If Palantir starts locking in big European contracts, the market could start pricing in future growth, pushing the stock back up. So yeah, even though Palantir's stock has been dropping, the energy around it isn't fading. With news like this coming out almost daily, plenty of people still believe that getting back to $100 is just a matter of time. And honestly, if you take a step back, this dip isn't as dramatic as it feels. One analyst broke it down perfectly. Yes, watching the price fall from over 100 down to the 90s in just a few days isn't exactly fun, but let's put things in perspective. First off, even with this pullback, Palantir is still up a solid amount over the past month. It's been a wild ride, but overall, it's still trending in the right direction. What really happened here is that a wave of speculators and hype traders jumped in a few weeks ago, pushing the stock up way too fast. Now that the excitement has died down, they've bailed, and the price is just resetting back to where it was before all the noise. In reality, nothing has changed, just the usual stock market circus coming and going. Long-term investors? They're still doing just fine. If you've been holding since a few years back, this drop isn't shaking you. A year ago, Palantir was way lower than it is now, and despite all the volatility, this has still been a winning year. Short-term price swings like this are just part of the game, especially for a stock like Palantir that always attracts attention. And here's the key point. Palantir's business is still rock solid. Government contracts are still rolling in, profit margins are steady, and cash flow keeps improving. The stock price bouncing around doesn't change the fundamentals. This is what happens when a stock gets overhyped. Momentum traders rush in, FOMO kicks in, then they all panic and sell when reality sets in. But the people who actually believe in Palantir, they're not going anywhere. Remember, Palantir just secured its spot in the S&P 500, which is a huge deal. That means more institutional investors are going to be buying in over time. And as that happens, the stock will eventually become less volatile. In fact, if you check the filings, the big players, the ones who really move the market, aren't selling. They're holding. So if you're in this for the long run, this kind of dip isn't something to panic over. If anything, it's an opportunity. Stocks never move in a straight line, and the road to big returns is always filled with ups and downs. Just look at history. The biggest companies in the world, from Amazon to Tesla to Google, have all had moments like this. None of them skyrocketed overnight. But in the end, it wasn't the short-term noise that mattered. It was the long-term fundamentals. And if you believe in Palantir's future, then none of this should shake you. According to him, ignore the panic, stay focused, and keep your eyes on the bigger picture. But what is your opinion on this? Comment down below. If you're curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also,
things just got out of control. The entire crypto market is booming. But when it comes to Shiba Inu, it faces a different story. While the price chart is green, this is not what was supposed to happen. Over 50 trillion Shiba Inu is now in danger. And the impact we might see in this couple of days might be insane. Something that we have never ever seen in our entire history. But what's actually going on? And should we panic? Well, let me explain. Disclaimer. The crypto market is going absolutely crazy today. Prices of almost all cryptocurrencies are skyrocketing, and it's all thanks to Ethereum. Ethereum alone has surged nearly 20% in less than 24 hours. This is especially wild because Ethereum has a massive market cap, making such huge percentage gains extremely rare. To put this into perspective, the bigger the market cap, the harder it is for the price to move significantly. Think of it like this. A small boat can be tossed around by the waves easily, but a massive cruise ship remains steady. Smaller cryptocurrencies, like a small boat, can experience massive volatility because it takes less capital to move their prices. Conversely, larger cryptocurrencies like Ethereum are like the cruise ship. It takes a huge amount of money to cause significant price changes. This makes Ethereum's 20% rise in such a short time almost unprecedented. And here's something interesting. This incredible surge in Ethereum is also dragging other cryptocurrencies up with it. The rising tide of Ethereum's success is lifting all boats in the crypto market. Notably, Shiba Inu, which is built on the Ethereum blockchain, is experiencing a significant impact as well due to its close connection with Ethereum. The ripple effect is massive, creating a wave of positivity across the entire market. But what is happening? How long will it last? And what's with our beloved Shiba Inu coin? Well, let's find out. It all comes down to a buzz around a crypto ETF, similar to what we saw in January with Bitcoin before the Bitcoin ETF was approved. After Bitcoin's ETF got the green light, companies quickly shifted their focus to Ethereum, aiming to secure an ETF for it as well. Almost half a year has passed with very little news or updates on the Ethereum ETF front until today. Something remarkable happened. Eric Balchunas, a well-known Bloomberg analyst specializing in crypto ETFs, updated his forecast. He boosted the likelihood of a spot Ethereum ETF approval from 25% to 75%. Balchunas, who has been pivotal in covering the spot Bitcoin ETFs launched in January 2024, shared his updated insights on X. This instantly sent shockwaves through the crypto markets, causing Ethereum's price to surge over 10% within minutes. Of his post, Balchunas mentioned hearing chatter this afternoon that the SAC could be doing a 180 on spot Ethereum ETF applications. Up until now, the SEAC has been mostly silent on Ethereum ETFs, caught in a debate over whether to classify Ethereum as a security or a commodity. This silence was previously seen as a bad sign for ETF approval chances. However, with a crucial deadline approaching for multiple ETF decisions on May 23 and 24, the pressure on the SEC is mounting. The SEC already knows how intense and vocal the crypto community can be, especially from their experience with the Bitcoin ETF pre-approval period. Back then, the community was incredibly pushy and even angry towards the SEC demanding clarity and action. Now with Ethereum, the pressure is even more palpable. The SAC is fully aware that delaying or denying these ETF applications could trigger a significant backlash from an already impatient and eager crypto community. And just because of this heightened excitement in the crypto market today, Shiba Inu has also surged by over 6% But here's where it gets really interesting. As Shiba Inu climbed, it hit a crucial price level that has everyone on high alert. A staggering 58 trillion Shiba Inu is now at the heart of an intense tug-of-war battle between bullish and bearish forces. To put that in perspective, this represents over 10% of the entire Shiba Inu supply. According to data from IntoBlock, a staggering 58 trillion Shiba Inu were acquired by 57,000 addresses within Shiba Inu's current trading range. This threshold has now emerged as a battleground where the short-term fate of Shiba Inu's value hangs in the balance. Bulls, the optimistic traders betting on price increases, are rallying to defend this level. They hope to ignite a surge in Shiba Inu's price even more. On the flip side, bears, the market pessimists, are pushing back, aiming to drive the price down and capitalize on potential declines.